welcome back. Let's do a stock market update. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. FOMC meeting tomorrow. So, big deal, I guess. It is. I'm thinking 1% or higher. Why higher? Because we're still above 8% CPI inflation according to their numbers. That's really like 16% in the real world, right? Because they fudge their numbers. So just knowing that, I mean, this is common sense, you would think, but this generation, I mean, for decades, no one's actually seen inflation since like the 70s and early 80s, right? Well, late 70s all the way through the 80s. So no one knows what to expect, or they're not reacting logically if they were thinking through it. So what I'm thinking is, everyone's like, oh, when is the Fed going to pivot? They can't pivot until they get inflation down. What happens if they pivot with 16% inflation now? I mean, very quickly, 6 months, a year, it could double, triple if they pivoted with high inflation, right? So at that point, we have runaway turning into Venezuela, like party's really over. This is it. And that's what Europe's looking at right now. I don't know what's going to happen in Europe. You think they would capitulate, right, to Putin, but they're not. Okay, so you think they, because they're not going to make it through winter if they don't. So what's the game plan? So you kind of have to put yourself in these people's minds. And here's what I actually think is going to play out. And I've been hinting towards it for like a whole year now. Like I've said, World War III already started. First, it's economic. I mean, the plants are still burning down everywhere. I pay attention, right, to the news feed, everything that's going on. I think since this entire giant globalization Ponzi scheme really running on like magical finance money, right? Because that's what it is. We've had cheap labor, globalization, and now it's been financialized in the past 10 years or more, 20 years, since like 2001, since NASDAQ bubble, right? It's become, the U.S. economy's become financialized. So has China's recently in the past decade, and Europe's has been for quite some time. I mean, the city of London, right? So that's why there's no industrial base in Europe and the U.S. And now China is like, they've had the biggest real estate, commercial, and retail bubble in mankind, right? So it's all coming down, and it's affecting everyone globally, right? The emerging markets, they're all going belly up. There's riots and protests in all these countries across the world, and that's because the dollar's been going up and all their debt is financed in dollars, and they're the first to go usually. So what do I think, this is my theory, what they're going to do. So they can't just bail out the economy without a good excuse. And the excuse will be for more QE infinity, but it'll also be for low interest rates and no QT, which is quantitative tightening, which is rolling all the debt off the central bank's balance sheets. Like, in the face of massive inflation, they need an excuse for more massive inflation while bailing every. Well, basically, what's going to happen is they want to. The West, I believe, has to switch over to a war economy, and so does the rest of the world. So that's the plan, to reindustrialize, and it's the perfect excuse. And historically, this is what always happens. So how do you get a war economy? Well, you start a world war, and they're probably all in on it. To be honest, every single like country, it's not Um, so that's what we're looking at. I mean, that's what I think. That's what I think is going to happen. I mean, the tea leaves are there. It's already kind of happening. It never starts over like a weekend. It's slowly, two countries start, and then more countries get involved, and then everyone picks sides, right? You already see sides being picked, right? China and Russia, and then the BRICS, and then we have Europe, US. I mean, Europe is kind of like a. Actually, I don't want to say that, but Europe, US, and Japan, and Australia, New Zealand, Five Eyes. So that's what's being set up right now, and then the money printers will turn back on. The only question is when, right? I think right now it's in the best interest of the US to sacrifice Europe. All right? I mean, it's kind of what's happening. And keep raising rates. And everyone around the world is going to just economically fall. And the US will be the last domino standing. And then all hell will probably break loose. It is what it is, man. Like, in the end, it is everyone out for themselves. And I think amongst all these ruling class, there's subdivisions. Like, it's like a giant mafia, global mafia. But at the end of the day, it's made up of it's a cartel, but cartels are made up of smaller mafias, right? And then when things get real rough, they all start just doing. They make pacts within the giant cartel, and then it breaks up because in the end, it's everyone for themselves. And what we're facing is going to be it's going to be wild. I can't explain it. Like, the whole global, like right now we're in a global recession. It's just in the US we don't want to admit it to ourselves. Europeans are wrecked, and it's not like Americans have no idea how bad they're starting to really feel it in Europe, and who knows how bad it gets during the winter. But yeah, that's what I think is going to play out the next few years. What does that mean for us? Well, we just got to survive until they start up QE again. Except it's going to be painful because inflation will be running out of control. There's going to be supply shortages, like massive supply shortages. Food's going to be really like utilities, everything. Gas is going to go back up. The SPR, they keep depleting it, but eventually, I mean, I just saw in the news that they plan on filling it back up soon, and they're going to get the oil from Canada. Like, the U.S. needs to get back to more exploration and cutting the red tape and tapping into its natural resources. And they will, and I believe the excuse will be when shit really heats up geopolitically or, kinetically. So, I mean, Biden was just on 60 Minutes, and he said, "Yeah, we'll defend Taiwan." So, I mean, it's happening, it's coming, and I've been learning about this for years. Actually, I just have high pattern recognition, and I pay attention. That's all it is. If you just do that, just because something hasn't happened in your lifetime doesn't mean it's not going to. And of course, guys, I've hinted towards this, right? They think there's too many people on the planet. All right, well, they're going to figure out all sorts of ways, right? The meat grinder historically has always been a way. Again, if your economy is failing, you got to send the men outside the empire, because if you don't, they're coming for you. That's just, and that's why I'm worried about China, because they got a lot of people, a lot of bodies to throw around. And they're going to throw them around. I believe they're going to throw them around all over the damn place. People think, oh, they can never end up here. Yeah, they can. I mean, they'll just have, they're going to have so many empty shipping containers, ships. They'll just fill them right up. But I don't want to talk too much about this because, they're going to take down my, I can't predict too much of the future. How are we going to benefit? Well, when the printing press is turned back on, we're going to have massive rallies in equities, cryptos, metals as well. At that point, there is no manipulation or anything that could hold it back. Talking about by the way, manipulation. It just came out. The banks were manipulating the VIX, right? Volatility index, which I've been heavily long, and I did buy a bunch of options last month and the month prior, and I lost a ton of money, and they've been manipulating it. Some dudes on Twitter are like, oh, they're manipulating it up. Dude, you don't know how spoofing works. Maybe they just want to bait people in to buy the VIX, and then they slam it. The banks don't want the volatility to go up. They want their stocks to not drop. When the volatility index goes up, the bank stocks crash. So, yeah, the order book, when people talk about spoofing, they're idiots. I don't know what they're talking about. All right, so manipulation it's a part of it is spoofing. The other part is running stops up and down, causing gamma squeezes and whatnot. And then they do it right around option expirations, right, or the day prior. So that's why I told the people in the private group and you guys on my last video, I'm not using leverage or I'm not using options. They can't shake me out. And it's been working out all right. But I'm waiting for the next shoe to drop in the markets, and I'm thinking it's going to happen like today, after the rate decision, or maybe next week, but it's very soon. I mean, there is no reason to buy stocks. There's no reason to go out on the risk curve. None. Corporate earnings only going to get worse with inflation, and I believe everyone's pretty much tapped out. They're not shopping as much because they see their bills rising, their mortgages are going through the roof. There's already massive layoffs happening. I talked about it in my last video. It's starting. It's not huge yet in the U.S. There's still a lot of hiring signs everywhere, but pretty soon I believe we're going to have a winter is coming. All right, and Europe is a major economy. It's kind of a big deal what's happening there. And don't think that's not going to negatively affect the U.S. It is. It might. you could argue, well, capital flight will come out of Europe and go into the U.S. as safe haven. No, the only place it's going is in the dollar. That's why the DXY Dixie's just making new highs, and that's also very bad for metals. Besides the funny business they do, China is not even fully back online. They're still, they've got the camps and locking people up, and I'm not sure. I believe that's all their own domestic political shit that they're doing. Um, but they're not even starting to consume their normal oil consumption. It's not even back up, and obviously they're not going to until major war, right? Then oil consumption goes through the roof. But until then, their economy is just it's in a full blown recession, and their housing and real estate is imploding, which is like times like 150, some multiple the size of the 2007-8 mortgage-backed security crisis. On top of that, the rest of the world has their own housing MBS bubble again. Um, so, and energy consumption does go up in the winter. So, yeah, it does not look good. Which also brings up inflation. Like I've said, it's not half, but it's got to be a large percentage of the inflation we see. Energy, right? So energy crisis creates massive inflation because everything is built and transported, and everyone's got to go to work. They have to drive, so people ask for higher wages. High cost of energy equals high cost of living and high cost of production, higher cost of services, higher cost of everything, which it translates into inflation. And that doesn't include the bottlenecks and the supply chain, and then all the fiat that's been printed since COVID. So the Fed's going to keep raising rates until it's so bad, and until things really heat up globally, as in WW3. All right, so let's get into charts and stuff. Where am I? Give me a second. All right, here's the bond market. The 10-year is at 3.57. It's pretty high. I mean, not historically, but it's really high for a bubble economy that is so the economy is more than 30% financialized. So when the bonds go up and the stock market and equities fall, that's bad for the economy, because apparently over 30% of the economy is just equities. So you can see the correlation here at the 10-year yield, right? Once we hit 4%, I don't know. I don't think that it's going to get real bad around 4%. Everyone's debt is really coming due around 4%. And quantitative tightening just started. They just started selling mortgage-backed securities back into the market. It also raises the requirements for people to get home loans, which is you're going to start having to put down 10-20%, and then your interest rate's going to be much higher on that mortgage, and your credit's got to be like perfect. And I don't even think the banks are going to lend to anyone, to be honest. But yeah, this looks bad. So I made this line resistance, but what happened to my older drawings? Anyways, I said things are going to start breaking around 2%. 2% was a big milestone. 2.6, things start breaking and blowing up. We're past that, heading towards 4. I'm amazed everything's holding up, to be honest. Take a look at the yield curve. It's inverted. So that's signaling red. Pretty obvious. Look at the DXY. Hopefully my sound and everything is working. I'm not going to re-record this. It's at 110. Very close to its previous all-time high. Within this, like decade. Which is a big deal, this decade. 121 in 2000. 2000. That was 22 years ago. I was a kid. Back in 1985, when Volcker raised rates by a lot, like 20% or something insane, it ran all the way up to 164. Is it going to get that high? No. I don't think it'll take out its 2000 high either, but getting close to it, like 115, I think that's still possible. I mean, it might. I really don't know. It depends how bad this milkshake theory plays out, which credit due, right, to Brent Johnson. He's right. Schiff was wrong. And he's right. Like it's playing out right now, as he said. So the worse Europe gets, the higher the DXY goes. Meanwhile, Russia and China are trying to dethrone the dollar, right? But, the more China is really intertwined with the U.S. economy. So the more they hurt the U.S. economy, the worse theirs is going to get. So how is that going to compete with the dollar? I don't know. Yeah, sure. What they're really doing is they're going to try to peg it to energy and probably gold and silver. And here's the new pipeline they want to run from Russia into China. Why? Well, the port down south is it's like a strategic thing. If it gets blocked for any reason, then China like immediately collapses and they don't have any energy, and then everything's got to get trained in and from Russia or semis. So, but that's still going to take probably 5 years, who knows, to build out for them. But they're being very strategic. Meanwhile, the West is turning off nuclear power plants and their own energy independence. It's almost like they want us to fail. And I'm not ruling that out whatsoever, which is very sad. But these people, they have no allegiance to any nation, because every nation's really just a farm. I think they're insane because these people don't like them, the Western ruling class. Anyways, all these red spots, these are everyone's raising rates except for China and Japan. And well, I guess European countries, but Lagarde says she's raising rates. There's more rate decisions for Europe, like today, and but this is above. But these are countries who've raised their rates more than 100 basis points. I believe the U.S. today will be next. why is everyone raising interest rates? Because the U.S. started raising interest rates, and the dollar is still the world reserve currency. So everyone has to follow, which is wrecking everyone else. Ironically, more so than the U.S. Which I think that's strategic, and good for Powell. Listen, I'm in the U.S., so yeah, and China's freaking out about the Fed raising rates. That's why they're trying to de-dollarize. But it's crazy because they still own a lot of U.S. Treasuries, and they could just press a button. But that is that is like a declaration of war at that point. And that also, like I said, our economies are very intertwined. That means that they're shooting themselves in the foot as well if they do that. Meanwhile, Switzerland's environment minister suggests people shower together. All right. So you know what? Before we look at let's look at more news events. So energy and food price shocks. Historically, a good visual. This was the 70s for the U.S. when we had massive inflation, and then Volcker raised rates. We're not even there yet. There used to be lines for gas stations. I totally believe we're going to see that as well, unless we fall into a very depression, like kind of a depression, right? And a lot of people get laid off, and a lot of people don't have to go to work. Then but I don't think they'll let it get quite that bad. They're Keynesians, right? So Keynesians feared deflation more than inflation. We all learned the hard way that that's nonsense. And I believe they know it's all nonsense. Oh, maybe not. I don't know. But what I'm trying to get at is they're Keynesians, and Keynesians believe war is good for the economy. Because if you destroy everything, then you could put a lot of people to work to rebuild everything, which makes no sense. Why don't people just go to work and build upon what's already been built, and then everyone becomes even more successful, and their standards of living only just goes higher. But honestly, guys, I mean, we're at the point in Tales of Empires where things have been so good in the U.S. that people are really weak and they don't like working. So we kind of have to welcome the hard times. And nobody likes the hard times, but it's kind of a necessary evil if you think about it. So, housing market dread, the Fed stopped buying mortgage-backed securities today, and this was September 17th, published by Brian Lutz. So mortgage-backed securities on the Fed's balance sheet, trillions weekly, each grid line equals 50 billion. That's from Wall Street. And you can see it's tapered off and just going sideways. Now it's going to go back down. Mortgage-backed securities on the Fed's balance sheet, November 2017 to February 2020. So they did do QT back then. And then by 2019, the U.S. economy was in big trouble. So was the global economy. And that's why we had the repo madness. And that was just really trying to paper over internals running dry of cash. Because when you have fractional reserve lending, the money printer technically has to stay on forever because, well, fractional reserve lending does create more money, as it whenever put out a loan, it has a multiple effect. So banks create money out of thin air when they create loans. But the problem with that system is it's really full on or full off. And whenever the central bank starts unloading all of its junk it bought from Wall Street, it immediately shrinks the money supply because banks don't, or the velocity of money, not the money supply, but the velocity of money just is totally shut off. And then no one could get loans for anything, from small businesses to homes. Only their friends, right? So, Fed's mortgage-backed security, MBS, from crisis to crisis, right? And this lines up, if you put a chart of recession, lines perfectly up with this. And that's the problem with central planning. In an organic free market, yeah, you have boom and bust cycles, but they're tiny compared to this. Like people wouldn't even they wouldn't feel a recession really, like because the boom cycle wouldn't be as great, and no one could kick the can down the road. The problem is the debt piles up. The more the debt piles up, the more painful it's going to be when the debts eventually all do come due, or they just print money out of existence, and then the debt doesn't really come due; it just gets inflated away, right? All right. Emerging markets start sending out warning signals against the soaring dollar. So here's all the emerging markets struggling. And I kind of talked about that. And, I'm on Twitter. I don't really retweet them, but I see it all over the place. Wall Street Silver posts a lot of them, and a lot of other people. There's just endless emerging markets countries that are their citizens are all rioting because they can't afford food, they can't get gas, and it's across Europe as well at this point. So that's not even an emerging economy. That is a first world economy, and the EU is going to break up or something. I don't know how they're going to convince all their people to go to the front lines. I believe that's the plan, but I don't know. We'll see if it works. If it doesn't, I mean, the people politically they've committed suicide. But it was going to all happen anyways, so yeah. So Powell at the Jackson Hole speech, which was last week, he was super hawkish. He basically said, we're going to go through some pain to fight inflation, and that's how it's going to be. And then the market started dropping, right, last week. And all of my positions that I put out in the alerts from the private group were all green, and hedged our portfolio. I mean, we've been raising cash. I've sold a lot of mining stocks and all that, and I've been doing it all year. And first I'm like, well, I'll sell some, maybe 30%, 40%, and then I'll hedge the rest. Well, you know what? On the rallies, I just kept selling more and more, and just was long volatility and inverse ETFs, and yeah. So even to metals. Europe's economy and living standards are plummeting. Let's open this one out. In Britain, 60% of enterprises are on the verge of closing due to higher electricity prices. 60%. This is reported by the analytical group Make UK, representing the interests of British industry, 13% of British factories have reduced working hours, and 7% are temporarily closing down. Electricity bills have risen more than 100% compared to last year. That's wild. That's really bad. In Germany, according to the Leibniz Institute of Economic Research, the number of firms and individuals went bankrupt in August alone rose 26%. Compared to the same period last year, the figure was significantly higher than German analysts had forecasted. I saw someone's utility bill, a couple people's. It went from hundreds of dollars to thousands. I mean, you can't last long with that. It's unbelievable. I mean, that's what happens when you shut off your own. And at the same time, because of this ESG carbon credits, tree hug and save the planet, which is they're shutting down nuclear power plants in Europe. Still, that's nuts. Maybe it's because they're preparing for, and they don't want those to get hit. I don't know. But I doubt it. They've been planning this for a decade, talking about this. They're just shutting off their own energy while their enemy completely cut them off. I guess they just want their citizens to revolt. There's no way they won't. I mean, they're going to be starving by spring, so I don't know. It's wild. This is a really big deal. And it pisses me off because people in the US just they have no idea what's going on globally. Because I don't know. This is what it is. I mean, after the past 2 years, guys, you have to realize that 30% of the population are hive mind gray people. They're just like automaton robots. They don't even count. And they're probably not going to be long, they're probably not long for this world anyways, for many reasons, if you know what I mean. And then I would say another, on top of that, another 30% are just real Joe six-pack normies. They don't fall for everything, but they just kind of go, ignorance is bliss, right? They're like, oh, I can't do anything about anything. I'm just going to live my life and ignore the storm on the horizon. And then there was another about 30% who actually pay attention, and then they kind of prepare in advance. And that's us. I mean, I put us in the elite class. We're like top 5%. We're right below the 1%, right, of those evil people. So, and European countries are for themselves to blame, really. I mean, Trump warned them that you have to become more energy independent. Everyone did. I guess they really might have thought that windmills and solar panels were going to be enough. Again, I've talked about this. Feminized culture leads to this as well. Despite, let's say some people just being corrupt, and, it's corruption, that, and then at the very top, they're like, there's too many people. We got to do everything in our power to, cut down the pop. The Economist Intelligence Unit, a British think tank, predicts that GDP growth in 2023 will be 5.3% in China, 5.1% in India. Dude, this is all bullshit. It's all negative. It's already like zero or negative. It's all lies. I don't even read that stuff because it's BS. Alright, let's carry on. Sentiment sullied after hotter than expected Japanese CPI. Oh, you think? I mean, they haven't even started raising rates, and they can't, literally. Japan's stuck. Just forever printing. I don't know what's going to happen there either. and they're on an island. They have to import everything. And commodity prices and energy, maybe temporarily, right? Energy and commodities will fall temporarily, like 6 months, a year, maybe 2 years. Depends how bad the central bankers want to put the whole world into a global depression. They need to put the world into a depression to stop inflation, just so they could reinflate everything later during the war economy. Okay, see how this is all piecing together? So natural gas, LNG is being exported from the U.S. to Europe, but I mean, it's starting to really go up high in the U.S. And at some point, the U.S. has to do what they have to, because the economy will worsen very quickly for the U.S. We're already been in a recession, but it's probably going to get really, really bad by I mean, maybe the shopping season will be a little bullish bump. Shopping season. I mean, the holidays. But after that, it's earnings are going to be bad. People aren't going to shop as much as in previous years. It's going to be very obvious where all these analysts who are really in bed with all the companies and the banks and whatever. They can't just say, "Oh, it's okay, PE ratios are justified," all this bullshit. It's going to be obvious, all right? I mean, big companies are going to be going under. Oh, speaking of, let's talk about this. This is FedEx stock. Fell like 20% in one day. Why? Because this guy actually came out, their CEO, and told the truth. And he didn't paint a rosy picture. Maybe he was thinking, well, if I tell the truth now, later it'll be better, right? And he's talking to Kramer, of all people. Kramer, dude, he's been on fire lately. Like every prediction he says or anything that comes out of his mouth, literally the opposite happens. Sometimes a day later, not even months or weeks. Like, he's been on fire lately. Like, everything he says, just give it a few days or a week, and it's just, there's people literally trading and doing the opposite of what he says, and probably doing real well. So if you watch this, I'm not gonna. Should we watch a little bit of it? I mean, I didn't watch it at all. I just heard all about it, read about it. Let's listen to a little bit of it. Oh, there's an ad. So he was saying, like, the whole world's like in a depression according to the volume of packages going through FedEx, and they are a global company.
Your next quarter, in what I thought you were going to make versus what you're making, it says to me, don't buy back shares.
Well,
don't buy back shares.
Yeah, we are reviewing all our cost actions right now. We're reducing our capex quite significantly this year. And we think it's allocation of capital. This is a good use of our capital.
But 548 was the estimate for second. You're going to come in at 275.
Well,
I mean, that's got to be more than just Asia and service. Europe.
No, we are seeing that the volume decline in every segment around the world, and so we started our second quarter. The weekly numbers are not looking so good. So we just we just assume at this point that the economic conditions are not going to be good, but it basically allows us then to fully go into cost management mode.
All right, let me talk in between this so they don't hit me. I used to work at FedEx when I was young in college. I used to work there, fill up like 6 semis, and then go do landscaping and deck stripping. It was wild. I can't believe I worked so hard when I was young. And that was a hard job, guys. Package handling, and then doing landscaping prior. I couldn't gain weight. I had an 8-pack, and I wasn't really going to the gym all that much back then. So, by the way, you guys can't hit my channel for copyright because I'm doing commentary on this, and this is public.
And take those actions that we can then restructure FedEx in a different way.
Raj, are we going to a worldwide recession?
Well, I'm not an economist, but you
know more than economists. Come on, they don't. They just push papers. You actually look at papers.
Well, I think so.
You think we are going to a worldwide recession?
I think so. But again, these numbers don't portend very well.
U.S. in the last few weeks as bad as China in the last few weeks.
Yeah, the U.S. Consumer has definitely spending less, but the U.S. has been somewhat insulated because the U.S. dollar is is the currency of choice for the world, and there's some insulation there. But I do see the U.S. is slowing down too.
Don't miss us.
All right. Hopefully they don't flag my channel. In the past, I used to do this all the time, but lately, they're getting real strict. Yeah, so. What else? Here's the Fed's $9 trillion balance sheet. I have this for QT. And this article is writing the private sector absorbing an extra $2 trillion of treasuries and mortgage-backed securities over the next couple of years is new territory, and the ramping up this month of the QT to $95 billion comes at a big problem, doesn't it? $95 billion, billion doesn't sound that much these days. With all the trillions they've been throwing around, but that's all it takes. Like, no one's buying homes anymore. The real estate bubble is popped, man. And then if they're rolling off that much, we'll see how long they could go before they do pivot. But again, I think this time around, they're going to really put the U.S. economy and the global economy into a real hardcore depression this winter, and already this fall. And then it's the only way they could stop inflation, or at least get it back down to like their number, CPI, 4 or 5%. And I believe by then they'll pivot, because it'll be painful, man. It's going to be real painful. A lot of people are going to lose their homes and lose their... Oh yeah, there's the car bubble, right? Everything's in a bubble. Everything's just going to hit all at once. And then I think it's the job layoffs. When that gets really bad, that's when they're going to have to pivot. They don't care about the stock market. They don't. And by the way, they want the stock market to fall, in my opinion, because that's where a lot of money comes from, and the consumer can keep shopping and bidding up prices everywhere, and we have higher inflation. And that's what it's going to take to bring commodities down and energy prices down. People don't have jobs. They don't have to travel. In a normal world, you would just boost more capacity. Oh, on top of that, here's the Saudis. I found this article, and they said this today or yesterday. If the economy recovers, the global economy, they can't. Oil's going to go up because there's been no. Here's what he said. When the global economy recovers, we can expect demand to rebound further, eliminating the little spare oil production capacity out there. That is why I'm seriously concerned, Nazar said Tuesday. He estimated that spare oil capacity currently only accounts for a mere 1.5% of global demand. That's severe lag, largely due to chronic
underinvestment in oil and gas production in the industry. An issue in OPEC Plus has also blamed for being behind soaring energy prices. Okay, I don't think OPEC has any spare capacity. They might actually fall behind. And on top of that, China's not even back to full demand, right? And Russia is supplying them. Yeah, this is the new normal, just high gas prices. And then these idiots are like, oh, we'll just go to EV, which is really, I think, just a big scam. That's impossible. It costs way more oil to build out the infrastructure and to mine these super rare earth minerals. I mean, sure, there's a lot in Africa, but that's China's. China's pretty much taken Africa, guys. And like I said, with things down the line, WW3 possibly, the U.S. really needs to pull its shit together, or we're going to have a very, very bad time. All right, so finish up the news. U.S. building permits crash in August. Multifamily starts hit record high. German utility giants close to massive LNG deal with... well, that's positive news. Ford expects an extra $1 billion in costs during Q3 due to inflation. $1 billion is a lot for an auto manufacturer. Their margins are just getting squeezed, and they're getting squeezed for everyone. All of corporate America and globally, which means they have to raise prices on things, which means more inflation. The Buffett indicator says markets are going to crash. It's a question mark. Going to crash? The Buffett indicator is a valuation measure that compares the stock market's capitalization to gross domestic product. A favorite of Warren Buffett, the indicator sits shy of 2.44 times market cap to GDP. And I could argue that GDP, you can probably cut that in half at least, because a lot of it's just financialization, right? It's stock market. So it's fake. And then there's all these services jobs that really shouldn't be in the GDP. And then the way they count GDP is, it's all, smoke and mirrors. The number doesn't mean much on its own, but it's striking when placed in a historical context, even after the recent fall in the markets. The ratio is still one of the highest on record, north of the 2.11 level recorded during the dot-com bubble of 2000, considerably elevated compared to the average since 1950. Wow, still up here. Yeah, man. We're going to see some red soon. Why the Buffett indicator is valuable. While often overlooked, the Buffett indicator tells us as much as measures market capitalization to GDP under blah, blah, blah. Look at the picture. All right, so individuals must produce first. Production provides income paycheck. Individuals then consume. Consumption provides revenue. Corporate revenue minus expenses equals profits. Stock market reflects change in profitability. Change in demand equals change in economic growth. All right, well, all of this is basically running on debt or credit, which is debt. And so that's not even in the Buffett indicator. And guess what? Interest rates are going higher. So the credit and the liquidity and the velocity of money is coming to a halt. And the Fed is actually doing QT. And this just stops rotating. And then stocks come down. Atlanta Fed cuts Q3 GDP estimate to just plus 0.3%. Okay, so the last GDP numbers were signaling recession. Forgot what they were. Was the last one negative? I believe it was. And that, historically has meant we're in a recession, and we are. Been in one all year. But the Q3, when that comes out, there's no way it's positive. I believe it's going to be bad. Unless it's completely a farce. China's gasoline and diesel exports explode in August. That's weird because China they're not really self-sufficient on oil. I mean, they are, and they have a huge strategic reserve that could last them for a very long time. While, of course, the U.S. depletes itself, and the EU cuts itself off completely, just to so they could hold on to Ukraine, which is not even part of the UN, but I guess it is now. All Europe has to do is just say, all right, you guys can annex it, and that's it. And then maybe the pipeline will be turned back on. But again, that doesn't go along with my theory that I laid out at the beginning of this video, does it? So, so Cook County, I believe that's in Florida, not sure, is doing UBI already. Here's what's really interesting about all of this that's unfolding here with the economy, in the US at least. And same with Europe, and actually everywhere, right? But as interest rates go higher and the stock market falls, pensions, they're gonna start going under. So when the Fed pivots, it's gonna be massive. They're gonna be bailing out states, maybe. If they don't, pensioners are gonna get a lot less than they thought they were. And at the same time, they're doing student loan forgiveness, and then all kinds of other stuff, right? Like handouts, which really pisses everyone off because it's not fair. So when the Fed does pivot, it's probably going to be, like I've said in past videos, believe it or not, they're going to print more than they did during the coup, right? Which they printed 40% of all US dollars supply into existence in like a year. Well, they're going to do even more, and multiples more, because it's the only way you keep this whole thing going. So they're going to need a bigger crisis as an excuse for all of it. Honestly, I don't think they need a crisis, but it's just kind of, they're going to do it. But yeah, so that's really all I have to say about that. What else? Latest poll shows majority of Americans far more concerned about the economy. You think? Russian oil coal exports to China soar in August. Yeah. See, a refiner, another U.S. refinery went up. Starlink is active. You could actually see them if you look up and you have a clear sky. You don't have a lot of light pollution. You could just see them with your eyes. You just move in a straight line, and they move very quickly. The satellites. FOMC preview: if 2023 comes in higher than 4.5%, the stock market will not. What? Okay. Why one trader expects the Fed to pause hikes amid growing evidence of slowing demand. Because they need to make sure that they bring inflation down. Not stop it, but bring it back down enough so when they do pivot, we don't have hyperinflation. That's why. But we're going to eventually. But by then we'll be in like WW3, and then everyone will accept it because that's why, and then blah, blah, blah. And you know, when they do pivot, that doesn't mean that the stock market's going to make new all-time highs. Doesn't mean that crypto is either. Maybe RH projects, but that's about it. But what will? Energy, commodities, precious metals will, at that point. Those things, consumer staples, things that you need and have to buy. Toilet paper, toilet paper. You saw how people act around toilet paper, haven't? Yeah, so let's look at charts. Let's look at the VIX. I'm telling you, man, they're really keeping it down, but it's gonna pop, and when it pops, it's gonna just keep running. You're gonna see a gamma squeeze. How high? I don't know. Don't expect it to like go back up here. It will when war breaks out, right? But like maybe Taiwan or something. But maybe not even then. Like I would be happy if it just ran to like 48. But don't make that as like a target. I don't set targets because they are never met. Weekly chart Dow. My blue line is around if it starts falling, it's around 2,700, 27,000, somewhere between 28,000, 27,000. Right now we're at 30,700. Here's the S&P 500. Look at what is this? Man, I forgot, but MACD? No, not MACD. Or is it? Yeah. Anyways, turn red. RSI is low. It's a weekly chart. Anyways, it doesn't matter. Fundamentals don't matter for a while, and then they do all of a sudden. Especially when, it's funny. I'm not fighting the Fed. The stock market is. I'm not fighting the Fed. The Fed's raising rates. They want to deflate the bubble to stop inflation, and everyone's fighting the Fed. Not me. I've been doing pretty well all year. Anyone who's been buying these dips have been getting their faces ripped off. Anyways, S&P 500, 3,200 around there somewhere, give or take a few hundred. Might even, nah. All right, so gold, is all of you want to see it. And I've told you guys it was going to fall around 1670, and it's there today. I think it could go lower because they're going to smash and take advantage of it when the stock market dumps. It could hit like 1540, 1500, somewhere down there. Spike down there. Silver chart looks weird. Maybe back down to $12, somewhere around there. 13, 14. But I believe, so the COMEX is being depleted, but they've been saying that for like a decade. Here's Tesla, top left corner. It has a lot of room to fall. That's all I gotta say. Facebook, now Meta, saw major support. Had a nice drop. 62%. Here's Amazon. Still up there, holding on, but it's fallen at least 15-20% from its all-time high. But it was really overvalued. It still is. It's 36%. By the way, they are directly impacted by energy costs because of all the delivery vehicles and the Amazon warehouse supply chain, right? They probably see the same thing as FedEx. I'd like to hear them say the same thing. The market's really going to fall. Here's ARC Innovation, hilarious, Kathy Wood, down 74.5%. She's going to go bust. I'm just waiting for it. Could that be the Lehman moment? I hope so. It'd be. It's funny because it's named ARC. It ain't no Ark, like with Noah's Ark. Netflix, down a lot. Hopefully further. So it's gone. Home Depot. Oh, by the way, I shorted the housing developers. I'll bring that up in my next video. It's pretty good. It's doing very well. It's down like 40%. Home Depot's down 35%. Or maybe it's probably more. I haven't looked in like a week. Look at crude. Why? Maybe I can't. It doesn't matter. It's down. By the way, a lot of rate hike decisions coming this today and tomorrow this week. And some more economic data after the rate hike decision today. And Thursday, it'll be initial jobless claims for the U.S. That'll be a big deal. UK rate decision. Germany's manufacturing PMI, big deal. Germany's industrial engine of Europe. A lot of numbers for the UK. Canada, core retail sales. And then Powell speaks Friday. That's weird. Existing home sales today as well is coming out. So smash some likes, join the private group, go to my website, links below. Follow me on Twitter, follow me everywhere. Leave anything in the comment section, it helps. and share my videos. That really helps the most. And if my channel grows, I'll do more videos. If it doesn't, I don't know. I do them when I feel like I have to, because important things are going to happen, right? But I'll make more videos. I just, I'm enjoying this summer for the warm weather, because I just think we're going to have a very stressful decade, to be honest. And it sucks, because the last 2 years were stressful, and it's just not going to end, man. All right, guys, take care. And I'll see you guys in the private groups or my free Telegram chats or whatever, and on Twitter.